Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, wrapping up the week, the Australian dollar took another challenge to the topside key level, which was seen at 63.55 and clearly marked was rejected. And from there, the market has ended posting a long-legged doji, which is indecisiveness. And the reason why I feel the market is indecisive is the fact is that we've got bullish divergence from the MACD that supports a further upside case. However, the topside challenge found very difficult with the bears or supply returning quite heavily to send the market back beneath 63 cents. In light of the pattern, and because of last night's price action and the uncertainty, is that we could see a decline back towards the region of 62.45 and then the key level of 60.65 still expected to hold after witnessing a very strong rejection after posting a Japanese candlestick hammer. However, with the indecisiveness, we do need to see a little bit more strength returning. Otherwise, in the next 24 hours, I do expect to see weaker in the Australian dollar. The euro also played a significant role in terms of staging an upside challenge, but failed, but still keeping within this yearly down channel. I feel the market has the potential to still take another challenge to the upside due to the MACD holding, but nevertheless, from the current rejection from the 98 region, that the market may actually first have a little test to the support level of 97.35, and then from there maybe actually see a rebound. The dollar index, which measures the greenback strength against a basket of 6 major currencies, is holding around 112.80 at the moment. The dollar yen, well, it's now trading at 150 and still no intervention. And what we can see from the current pattern that the bulls have maintained since 143. So 7 big figures and no sign of the Bank of Japan and also no sign of any profit taking. I feel that the market could actually display quite a heavy fall once we get that intervention, but due to the overbought level, that's extreme, that this is probably a place where I feel the market may soon find an intervention from the BOJ and therefore look for at least a 4 to 5 big figure drop due to the current stretch that we've seen since 143 and 7 big figures. 5 big figures would not be no surprise in terms of how the market is situated. Well, the sterling, the market was a little bit mixed overnight after the Prime Minister, Liz Truss, resigned, and therefore the market was a bit whippy overnight. Still, the bottom line is that we're trading in the middle of the range, which is at 109 to 114.95. In light of the technicals being a little bit weak, that we could see a down test towards the region of 111.80 and then maybe down to 111.30, and then I expect to see another 300 to 400 point rally. So let's see if that comes through. Gold was also heavy overnight after a brief up test, failed to sustain and still maintains its bearishness as it weighs on the level of 1,621. A clear break of this point would see further risk to the downside, and then we have to jump to the broader picture because that gives us a significant move from 1,621 to the region of 1,596 and put in an objective somewhere around 1,515 to 1,565. Wrapping up with oil for this morning, the market did briefly look above that resistant level of 85.20.40 after a stab above there and closed lower. From the rejection has put a little bit of a dent in the price action, especially with the RSI rejecting the midway point, and the MACD is holding a weak negative signal and therefore gives me further indication that we could be looking back to the downside, and that is at $81 for an initial target or trajectory. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.